The next panel we've got is corporate treasury management with Bitcoin. We've got a great panel. We got Ed Julian, and we forgot to change the name. So this is not John Tunnison. This is Curtis Perdelwitz, and we've got Sam Callahan, and we got Brandon Karpelis. So I'll let them take it away.
All right. Yeah, before we start, I don't want this to necessarily be just a panel. We can ask each other questions. We all know each other from this space. But before we start here in the room, for those of you that are watching at home, you'll just have to bear with us for a second. But who bought their first Bitcoin before 2015? Not many. Okay, new people. Before 2020? And then the rest after 2020. Okay, and how many people have some kind of interest in a Bitcoin treasury company? Most. Okay, for those of you watching at home. Cool. Well, we had a meetup online to say, what do we want to talk about this? Because the subject, as they put it, could be a 3-day conference in and of itself. Tim Kotzman and I do the Bitcoin Treasuries Media, where we did an in-person conference in New York a few weeks ago, and we're doing a digital conference this Tuesday, the 21st, from 3 p.m. to 9 p.m. Eastern, if you want to tune in. But we thought that one topic that I keep hearing about that people want to talk about, and it's very applicable to the treasury companies, is the idea of a digital moat. And what does a digital moat mean, right? We could go into any topic about these treasury companies. But it was something that I learned while I was working at Strategy of what this concept of the digital moat was and how Strategy is employing that digital moat to change their underlying business. So we'll explain as we go. I think Curtis will be the best one to explain it because it's really made a difference for them at Giga and into Swindows in terms of what this digital moat means. So instead of me butchering it, Curtis, why don't you lead off by telling us what it is? And I think our other panelists have some good ideas on it as well.
Yeah, happy to. And before I jump into that, just give you a little background on who we are at Giga Inc. Giga Inc. is our mothership. That's what we call it. It oversees the multiple facets of our core operating business, which, as Ed mentioned, is a company called Into Swindows. We manufacture windows, doors, unitized curtain wall for commercial buildings, high rises, that type of sort. So what does it have to do with Bitcoin? Well, we are cash flow positive. We are a profitable company, 30% year-over-year growth the past 5 years. So when we're looking at that, back in 2021, we made the decision that we're going to start stacking Bitcoin on our balance sheet as a treasury asset. And so we're operating twofold at the same time of the Bitcoin side and the core operating business in parallel so that they can continue to push each other further, minimizing risk against each other, but really pushing those flywheels further and further. And to do that, as I just mentioned, what I was talking about with the digital moat is mitigating risk so that you don't sacrifice a core business just because of Bitcoin or vice versa. And for us, that's where the digital moat really comes in. It gives you the ability to have bumpers of how you're going to make your decisions. You're not making them on emotion. I know that was mentioned earlier. It's important. It's key. You have the right metrics in place. You have the right protocol because for us, we're a company of almost 650 employees. So there's a lot more people involved in decisions. And the way you make your decisions is based on specific metrics, specific details, specific processes, has to be mapped out. And when you have 650 people, not everybody's going to be orange-pilled, but you got to make sure that people are on the same page and understanding what is the vision, the mission, what is your goal. And so the moat helps keep that in place. It also helps to segregate the core business from the Bitcoin side and vice versa so that you're not going to impact one or the other in a negative manner, but use them to drive each other forward. And for us, especially with the core business, that is also helping us. When we do hit that bear market, it'll be able to keep us moving, be able to keep us stacking. But at the same point, it's because we have that clear direction from between both of them.
Yeah, I think that's a good point. So I think to summarize some of it, it has some resiliency, right? Balance sheet resiliency. When you have digital capital that is the best reserve asset, your business is more resilient. And I think in the 80s, you had like General Electric with Jack Welch and some of these major business leaders that really pushed this idea of shareholder, returns and quarter to quarter, focused on the income statement and earnings instead of focusing on the balance sheet. And so you had corporations across the United States decapitalize themselves And what they found is that in periods of stress, you're you're really not as secure, right? And you're dependent on outside capital during those periods of stress. And when you have a strong balance sheet, it gives you a moat to have more optionality in those periods. And so really during COVID, I think a lot of companies started to rethink their strategies and think about, how much cash do we have? How much of a bumper do we have? How big is our balance sheet? How strong is it? But then they found out another problem is that we're not in a period of low rates anymore, and we have high monetary inflation. And so what do we actually hold the reserves in? And that's when Michael Saylor came in and pioneered and started to add Bitcoin to the balance sheet, became the first corporation. And so that's really, when you talk about a digital moat and a corporation, I really just think about balance sheet resilience and then doing it with the ideal reserve asset in Bitcoin.
Brandon, before you go, I was working at IBM in the 90s in manufacturing, and we would make more computers in the last 2 weeks of the quarter, in the 13 weeks, than we did in the first 11 weeks, right? You know this well, in the window business as well. And I just kept on asking him, like, this is killing us. We're incredibly unprofitable because we have to do so much in those last 2 weeks, and there's no way out of it because the customers expect those discounts in the last 2 weeks, and so they only buy in the last 2 weeks, and it's just this vicious cycle. And so in order to break out of that, you have to have some kind of resilient way. Brandon, you're coming at it from Sovereign from a different approach for maybe smaller businesses or ones that are, just trying to find a way to some new level. Why don't you approach it from your angle?
Yeah, so I spent almost 2 decades working at a commercial bank. I spent most of that time in work out there, and I would handle distressed companies. And a lot of companies would come across my desk, exactly what Sam was talking about, where there was this big emphasis on cash flow. And you would look at them, and they would have positive debt service coverage. They could pay their bills. Maybe they weren't meeting 1.2 times, so it tripped a covenant, came to my desk. But they're at 1.08 or 1.12 or whatever. And these businesses were actually falling behind because their cash flow was positive, but it wasn't better than inflation. And they would continually have to borrow or re-up. And during periods of low rates, sure, no problem. We can give you more money, not a big deal. The debt service isn't that significant. But as rates started to go up and input costs started to go up, businesses were finding that they weren't able to pass these prices on to consumers. And the fact that they had been so reliant on cash flow and that they were highly levered, and it was like, well, they basically got in a mindset that, hey, I can just borrow again. This lender, I'm going to take him out golfing, and he's just going to give me more money. And that really happened for a decade. And I mean, I watched it firsthand. And that was a big part of me deciding to leave that job and go work at Sovereign, where we work with small to medium-sized businesses and really help them understand this dynamic that you may be profitable on paper, but if you're not beating inflation, you're not actually profitable and you're not growing your balance sheet. And the irony is you are growing your balance sheet, but it's on the liability side. And you would watch the liabilities grow, the net worth shrink, and the assets stay exactly the same. And I saw that over and over and over again. And so at Sovereign, that is something we really try to hammer home and help these business owners understand that you may look good on paper, but exactly like we were saying here, it's not all about the income stream. You have to have a balance sheet. You have to have capital to invest back into your business at a later time. And you need something that is going to outperform inflation. And honestly, Bitcoin is really the only thing that makes sense there. And that's really what we're focusing on is getting that message into businesses' heads.
One of the themes I see coming up more and more recently, I guess this year, is this idea of stop saying in the Fed and stop saying down with the banks and the government and everything. I think Saylor has kind of proved that you can adapt what you're doing to the existing environment and become very successful for it. For example, he said, how am I going to get into fixed income? I got to give them something that they know. And so these preferreds is exactly what they know. It's a 9-10% product that they go, okay, now you're speaking my language. And I'm seeing that becoming more and more successful from service providers or treasury companies they're not trying to fight so much, not trying to say Bitcoin is better, Bitcoin's the better way, but instead, how do we adapt? I was with a company, a family-owned company, 65-year-old company, got bought by private equity, and private equity destroyed the company and the family and everything. And it was just, yeah, that's what private equity does. where do you see maybe the digital moat affecting kind of the bigger picture of the way businesses grow and adapt to the existing system that's out there, Wall Street and banks, that that Bitcoin can fit into rather than try and just take a hammer over the head? Anybody? Felix?
I'll jump on it. Look, I thoroughly believe that Bitcoin is the best form of money, right? The best reserve asset. I believe it's going to infiltrate every single nook and cranny of the entire traditional financial system. But the way that the capital markets are structured right now, as Saylor and many others have pointed out, is it's very siloed, right? There's investment mandates. They're just restricted from allocating to certain places. Like we would talk to a lot of institutional investors like pension funds and endowments, and they have these, allocation buckets. Like this is our private credit. This is our, equities. This is our international. Like it's very siloed. And so Bitcoin just being a new, digital commodity, a new asset class, they haven't really updated their policies or their mandates. It doesn't really fit squarely into a lot of these buckets. And so if you can have Bitcoin-backed securities that really are just they can immediately wrap their heads around that, like, okay, this fits into our investment mandate. This goes into this allocation bucket. We'll make an allocation, and suddenly they have exposure to Bitcoin, which I think everyone maybe in this room agrees is a good thing to have. And so really, it's really about accessibility and just improving accessibility for Bitcoin through these Bitcoin-backed products. And it's how Bitcoin infiltrates into it. And so, we're not saying, end all these banks entirely. We're saying, hey, these banks would be better with Bitcoin. And every institution would be better with Bitcoin. Every corporation is better than Bitcoin. Every individual who has Bitcoin on the balance sheet is probably doing better than somebody who doesn't. And that's my belief. And so these Bitcoin-backed securities just kind of help us bridge that gap to get us there. That's how I view it.
Yeah, when talking to these business owners, you just have to lay it out for them that there is a fiat monetary regime, and it's a game, and you just need to understand the game that's being played, and it's not. It just is that's just the way the world works right now, and you can either adapt or you can die. And there's this incredible tool that allows you to adapt very easily and actually insulate yourself against the debasement of the currency that's going on. It's been going on for 100 years and 110 years or whatever it is, and it's going to keep going on. And you just have to wake up to that's reality. You might not like it, you may think we're, in the 1950s, but it's just not true. We are debasing currency faster and faster and faster. 2020 woke a lot of people up to this reality, but it's are you going to sit by and let everything go to hell in a handbasket, or are you going to do something about it? And it's, there are these products out there, there's other tools available, but you have to understand that you're in the middle of a banker's game, and you have to insulate yourself against that, because if you don't, unless you're selling super high margin products and have a massive, a real moat, a monopoly moat, a legislative moat, a lobbying moat, there's this other tool where the smaller guy, the guy who doesn't spend $10 million a year on lobbying to make sure all your missile systems are sold to the government, you have to be able to participate in this game and win at it, and you do that by putting Bitcoin on your balance sheet. So.
I think there's also two other ways to look at this from the individual side, which, as I mentioned, strategies, setting the playbook and resetting it on a daily basis, providing everybody an opportunity to get in where they feel comfortable, dip their toe in before they start getting into it more. But the flip side of that is the business side and how the businesses are using that product to grow. And the insulation part of it also comes across multinational borders. For us as a company, it's incredibly helpful because we do have locations around the world. And so now you're starting to see how the global currency is now becoming one, and it's making business easier for businesses. They can grow, they can have a bigger footprint. Yes, it might not be the same if you're a mom and pop coffee shop. You're not going to be looking to sell around the globe, but it's going to continue to grow your business based on the strength on the balance sheet and also the products and opportunities that you're offering to others to meet them where they want to be met. As Zapright was talking about, there's a demand for that because that's where people want to be met. It's not what the companies are forcing, and that's why we keep seeing strategy coming out with new products, and because the seller says it's what the people want, and he's just finding new ways to bring it to them. So I think as a business side, it's important to listen to what the people want.
I also just think about like these banks and financial institutions, like what you just said, they're responding to client demand, which is very, very bullish. They're just building products. And why there's client demand is because of the fiat debasement that a lot of people are waking up to. And so they want access to Bitcoin. And so it's kind of a beautiful thing to see. You saw Vanguard recently, right? But they're responding to client demand and probably the fact that BlackRock's went up to 100 billion in less than 2 years. But that's the game theory playing out. But it's a good thing because Bitcoin, more Bitcoin services, more Bitcoin products, and these financial institutions providing it, again, improves access for everyone to get exposure to Bitcoin. I think exposure to Bitcoin is one thing too, but just making sure that people understand the trade-offs and the risk is also something I'd like to add, because there's nothing that beats self-custody in terms of risks that you eliminate. But as long as we build out a whole plethora of products and services, it's better because it just makes Bitcoin more ingrained into the system and more accessible.
I've never, in the 14 years I've been in Bitcoin, I've never called myself a Bitcoin maximalist. I always say I'm a Bitcoin inclusionist, right? Because I go to ETH Denver, I go to these other places, I want to see what they're doing, right? And then I come back to the Bitcoiners and I'm like, can you do that on Bitcoin? They're like, no. And then I'm like, well, then shut up, go build it, right? If you can't do it, well, then let's bring people in. Let's not keep being so antagonistic. Ripple has actually done a good job of this. They knew they were going heads up against Swift in the CBOS conference. So they had their own conference down the street in Toronto. And they had, what are those things called? Not TikToks. They're the little cart things that they ride people around in. Anyways, tuk-tuk. TikTok, tuk-tuk. Yeah. And they were taking people back and forth from the Swift conference. And so next year, Swift invited them in and gave them $1 million booth, right? And said, okay, you're in. And now you see this integration with Ripple and Swift. So they found that path, that way in. You're going to shoot it down. Don't do it. Don't do it. Let's go on to the next.
I was going to say Ripple has a great marketing budget,
Well, whatever. They're inventing money to pay a marketing bill. It's unsustainable. But anyways, but the point is, it's finding that way finding the way to meet them where they are. So that we've talked about that topic. We talked about the moat. I think, at least in our audience with Bitcoin Treasuries Media and Tim and I, we get a lot of people that are saying, well, how do we start? So why don't we start with you talking about who was the first person out of your 650 that said, should we do this? How hard was it to get the C-suite on board? And then Brandon, you can talk about these small businesses and what usually happens. And then Sam, on a reverse merger, what does that look like? Yeah, so, okay, go ahead.
Yeah, so our journey was a little bit different because it was a while ago and it wasn't as common. As I mentioned, we started stacking in 2021 as a company. But prior to that, our CEO and a few of the executives, we were personally in. And honestly, it was a conversation we had one day that was, well, we're all doing this. We all believe in it. Why are we not doing it as a company? It just makes sense. And so we did. And so for us, you have to have the buy-in and the vision, and you have to make sure that it's clear. It's not just in one person's head, because as we know, just like with keys, you could lose the vision. You could lose the individual whose head it's in, and you won't be able to get it. So for us, it was making sure we were all on board. We were all on the same path, but we had to be clear. And for that, as much as you think communication is great, it's not. We speak the same language, but say different things. So we had to put it down, make sure it was clear. And that's how we were able to then get a little bit more of the executive team on board. And then it slowly started to permeate through the company. We made it part of our DNA in everything we do, everything we talk about. Every day of the week, we have Monday through Friday, we have a daily all-team meeting. We go over key metrics for the company. We talk about that. That's one of the pieces we talk about. It's got to be how you live and breathe, and it becomes part of your culture. And so for us, that's how we were able to grow it from 3 or 4 people in the C-suite and the executive team to 650 people being on board, understanding what the vision is and how to grow it. And then from that point, you have to be smart about how you get the Bitcoin. Obviously, if you're getting money in Bitcoin, and the payments, that's great. That's, as mentioned, that's an awesome, easy way to get it. But for us, we didn't do that. All of ours has been funded out of our profits. So to do that, we made sure we put in specific metrics, specific details, guidelines, how and when, take the emotion out of the decisions, so that it can be replicated, it can be scaled, and over time, okay, we've hit this marker, let's buy some more Bitcoin. Hit this marker again, let's buy some more. And that's how you make it, all of a sudden, it becomes part of your normal day-to-day work for us.
Yeah, so the businesses we're working with, that's exactly what we're trying to impart on them. And so far, we've been really working with, I know John said it earlier, solopreneurs. That's been, I call them Bitcoin curious solopreneurs that come to us, and it's like, okay, now we're working through the setup. We're showing you how to buy it. We're showing you how to custody it. Here's a whole range of options. We kind of, meet them where they are. I always say, the right amount of Bitcoin is the amount of Bitcoin that lets you sleep at night to start, and then we can go from there. And as we're doing that, as you get further down, you get some buy-in from them. It's such an important point that it's like, okay, now you need to start imparting this on the rest of your company. You need to start talking about the Bitcoin ethos, and there's all sorts of products coming out. John's here, Sound HSA, and Unchained's here. They have an IRA product to start incorporating these things into the business and start giving the employees options. You don't have to force it on them, but hey, if you're interested in Bitcoin, or if you're interested in, an HSA account, you can save some of it in Bitcoin, and really letting the idea of Bitcoin and the ethos spread throughout the company so that the employees can understand it and that you have a common vision, and you get more buy-in from employees too that see you have a low time preference, that understand you actually care about the labor at the company, and they're not just some number in a spreadsheet. They're not some economic widget that you just plug into your calculations. And building that ethos within the company is sort of the next step after you get these people on board, and letting that permeate throughout the company.
Yeah, I think it's a little different. So a little bit about Orange BTC. We are the largest publicly traded Bitcoin Treasury company in Latin America. We just listed a couple weeks ago on B3 in Brazil, and we did it through a reverse merger. And even our co-founders were really critical about the reverse merger, because we wanted a company with some infrastructure that aligned with our goals. And so the company that we did a reverse merger with is an education company, and there's infrastructure that we can use and repurpose for our goals to educate the marketplace on Bitcoin and Bitcoin Treasury companies. And our co-founder is also really experienced running public education companies in Brazil. And so it's really about, for us, it's about educating the regulators and educating the market about Bitcoin and Bitcoin Treasury companies. Even for us, we designed and optimized the Orange BTC to be a Bitcoin Treasury company from the beginning. And we did some things that hadn't been done before in Brazil in terms of our corporate structure that allows us to be very flexible with our capital raising activity, which is really important for Treasury companies to be opportunistic and take advantage of market conditions when it's accretive for our shareholders. And so we did these things that were kind of new in Brazil. So we had to educate the regulators and educate the market about what we are. We're a Bitcoin Treasury company, and they wrapped their heads around it. And we got the approval, and we're now listed. But really, for us, it's about, hey, this is a country that's maybe a couple of years behind in terms of Bitcoin Treasury companies, but then Bitcoin itself. And, it's an opportunity for us to really educate that entire country that has really suffered from high rates of currency debasement. And so, that's kind of from our perspective, it's less of an internal thing, because everyone at Orange BT is already, fully on board with Bitcoin. It's more about educational efforts outside of that.
You may not have been there when it originally happened, but how did the education company, I guess they were called Orange, right? The reverse merger company?
They're Integros.
Okay. How did they react when this guy showed up and said, we want to buy your company to make it a Bitcoin Treasury company?
Yeah, I actually wasn't there for those conversations, so I'm not the best person to answer that question. But from my understanding, obviously it went through and it approved. So I think there's some education there, but they were all for it.
Great. We have about 5 minutes left. We'll take any questions that don't involve Naka, Metaplanet, or... Really? I thought it was 11:50. Okay. 1 minute. So we'll take... We're Bitcoiners. We're always a little off. All right, we're way off. Yeah, no Metaplanet, Naka, or Strive. Yeah. think each one of these guys is going to have a different answer. We talk to a lot of treasury companies, like all of them. And what I've been saying on podcasts lately is like, nobody knows. This is really so early that everyone we talk to gives us a different answer. So I'll let each one of them give their answer, but I'll tell you that there is no answer. But
Yeah, most definitely. It's going to be based on the individual company and what their perspective is. For us, we're looking to hodl. We're looking to keep it there. We're looking to potentially use it if everything goes sideways. You have a backup. You have a way to continue to fund certain aspects if you need it. That's not our goal, but we know, okay, it's there. But the more you grow, the more you have. And like I said earlier, for us, we're running a core business in parallel to that. So it does provide certain avenues for us to do other things. For example, this year we opened a second factory. We were able to get Bitcoin-backed loans. There's certain things that you can do now that you couldn't do if you didn't have it on your balance sheet. There's certain aspects that you now have doors opening in the future that it allows for you to do. And it doesn't mean when you're doing a Bitcoin-backed loan that you've lost your Bitcoin. For us, it's actually already almost all fully paid back very quickly because Bitcoin continues to go up. And the core business helps to pay that off. So it's really going to be based on the individual business. There's other treasury companies out there that may not have as strong of a core business, or may not even have a core business. So their perspective is going to be a little different. But for us, it's more the hodl, but it's there for protection as well.
So I know it was forbidden yesterday, but the answer is it depends. It really, what are your capital needs in the coming year? Do you need to do a renovation? Do you need to put a new roof on your factory? Do you need to update your CNC machines? And the great part of having Bitcoin on your balance sheet is now you have a forcing function to say, am I going to get a greater return on this capital investment? Or should I just hold the Bitcoin for a longer term? And that's a big analysis that should be going into your decisions as well. You shouldn't be deploying your capital if you're going to start returning less than just holding the Bitcoin. And it really does depend. What are your expenses over the next 6 months? Are you in a jurisdiction where maybe your the possibility of your bank rails being cut off are much higher than somewhere else? I would say you should hold more in Bitcoin at that point. Are you comfortable? What is your business doing? Are you an activist company, or are you just selling paper? And so all of these things factor into how much you should be holding, what your outlook is. And then a lot of it is the conviction of the owner, conviction of the C-suite, conviction of the board. Do you guys really believe in this? Or is this just like, hey, we're dipping our toes in because we heard about it on CNBC and we know we need to do something. And so it really just runs the gamut depending on the personalities and the needs of the business.
Real quick, one thing you mentioned, which is something we do, and I know you asked more about what you do with it on the balance sheet, but it's also what you mentioned about was the hurdle rate, and making decisions to add more to the balance sheet as well is key and important. And that's something for us. Like I mentioned, another factory. There's other things that obviously when you have a tangible product, you want to invest in it. But we look at it and go, okay, well, what's the return going to be? Are we going to make more if we invest in more Bitcoin? Or are we going to make more if we invest in this product that will open up this opportunity? And so it starts to become a deciding factor as well, which helps guide you from within the balance sheet to help drive the balance sheet to add to it in the proper way.
Yeah, just real quick, because Orange BTC, so as a treasury company, similar to Strategies and Meta Planets, we're holding Bitcoin and we want more Bitcoin. And so if we were going to be especially in a market like Brazil, where there's large pools of capital that can't buy spot Bitcoin, they're restricted. And they look to Orange as a way to get exposure to the Bitcoin. Part of that is it's our balance sheet. It's our Bitcoin balance sheet, right? And if we're going to issue debt instruments that are collateralized with that Bitcoin, as a company, we want them to know, hey, this is the Bitcoin that we have on our balance sheet. We're going to accumulate more Bitcoin. And that's why these Bitcoin-backed securities could be useful for you and could fit into your allocation bucket. But if we're playing around with the Bitcoin and we're selling it and timing things, like they'll never trust that. And so that's like from a more medium to long-term perspective, we have to think about our goals in terms of our what debt instruments we want to issue, equity instruments we want to issue that are Bitcoin-backed. But we have to maintain that balance sheet and then ideally accumulate more.
Okay, is that it?
Probably going to take 10 minutes to answer this, so
Okay.
short answer. What's it going to take for the industry from a corporate treasury standpoint to move more towards the actual self-custody? It seems like today that is more the exception than the norm, whereas
Insurers.
Us pushing it.
Yeah, but also insurers. I mean, you're just not going to get an insurer that's going to go through your whole self-custody plan. I mean, it depends on what your self-custody plan looks like, right? But the insurers want to see that you put it with Coinbase, you put it with Anchorage, right? They want to know that it's with someone that's already done that. Now, as we come up with more complex and secure self-custody models for companies, then it might be easier to get insurance. But insurers just have their books and they don't like stuff like that. Are we time? Okay. So before we wrap here, I'll just say that like most of Bitcoin, what I've seen, especially in this Bitcoin Treasury space, is that everybody wants to help everybody, right? There's no real competition in here. The pizza's growing so fast that everybody's pizza is growing just as fast, right? And so if you're thinking about doing this, if your company is saying, hey, we should put Bitcoin in, don't try to learn it for yourself again. Don't make the same mistakes. There's plenty of resources out there, plenty of companies out there that can help you avoid those mistakes and reach out to that space. Yeah, Brandon will help you with any of that. But it's not as hard as you think. It'll secure your future. It'll give you that digital moat. It's just you got to take that leap. So thank you all very much. And
Thank you.